Suyash, thank you for being with us. Before we start talking, let me also bring in Mr. Feroze Azeez, who joins us on the broadcast on Budget Day. Feroze, always a pleasure chatting with you. Great to have you here with us on Budget Day. From what I understand, the markets are recovering post the budget speech. But how do you view the taxation on investments that we're just talking about, be it the increase in the LTCG or the doing away with of TDS on mutual funds?
Yes, so I think I'm reasonably positive. See, I've been talking about capital gain simplification for the last 2 years. I think simplification, the key point is all assets have been brought to 12.5%, which is a big move because it says financial and non-financial assets. All of them have been brought to 12.5% in the long term. The only difference remains between the long-term categorization after 1 year or 2 years. So the simplification need which capital gain had on both counts has been satisfied. One is on the tax rate for real estate, for gold, for equity. All of it is unlisted equity, private markets, all of it at 12.5%. The only difference is 1 year and 2 year for non-financial assets. That's a very, very big change. And I think that's a huge simplification. Second, earlier there were different time periods for them to become long-term. Now, all of them become long-term in the same time period. Unlisted equity was 2 years and real estate was 2 years. But there were some debt instruments which were 3 years and gold was 3 years. So all of them become 2 year plus. So I think simplification on tax rate and the period to get to long-term is a big, big move. Now what can happen is real estate can have a large impact because earlier real estate used to have a taxation of 20% plus. So people used to use the benefit of Section 54 to reinvest into property. But if there is somebody having to pay only 12.5% tax, he may not reinvest the money back into property. So it is a double-edged sword, or it could also be construed as positive or negative for real estate, because real estate always had this engine of reinvestment because of Section 54, which was capped at 10 crores a couple of budgets back. So I think it's a big, big move on the capital gain head. And I think I'm reasonably positive. Second, I think Section 50AA, which was included in February 2023, brought into some degree of tax disadvantage for fund of funds inadvertently. That has now been clarified. So if you look at the finance bill, it very clearly says Section 50AA now has been reversed in the language. Instead of 35% in equity, which was the mandate to be out of this gamut, now they've said if there is more than 65% in money market and debt instruments, it will be covered under Section 50A. So that's a great news for the mutual fund industry, where fund of funds inadvertently had got covered into Section 50A, and that has been corrected. So these are some major changes for the mutual fund industry and the investment arena. But I think the simplification need, which I've been highlighting for years, has been done to a 80-90% extent, which I would expect.
All right, Feroze, stay with us. We also have Mohit Gang now joining us on the broadcast as well. Mohit, thank you so much for taking time out with us to be with us here on Budget Day. We're just going to come to you, but Suyash, first, why don't you give us a heads up on how the markets are trading at this point in time?
Certainly, Krishna, and as just Feroze pointed out, the initial reaction, the market did not like the hike on SGCG and the STT on futures and the security transaction tax on futures and options, which was hiked to 0.02% for your futures contracts and by 0.1% for your options contracts. So right. I think the initial knee-jerk reaction was negative. The markets did correct, and we saw a fall of about 1% for the headliners and about 1.5% to 2% for the mid-cap and the small-cap stocks. But since then, we have seen a good bit of recovery. Nifty currently is down by about 0.5%. It has in fact managed to move past 24,350 mark. Volatility index has declined significantly. It's down by 11.5%. It's back below that 14 sort of levels. The small cap and mid cap indices both have paired losses as well. Both are down about 1% as well. And when it comes to sectors, the FMCG sector is doing well as it was doing in the morning. It's up about 2%. All other sectors, barring a couple, pharma and your realty, your defensive sectors, apart from that, all are trading in the red. But we are seeing some recovery as the day goes by. For example, Nifty Bank, which took a hit of about 2.5%, is now down about 1.25%.
So basically, markets in recovery mode after the budget speech announcement, after dipping much lower, they're all on recovery mode. Mohit, the volatility was expected as far as budget day trading is concerned. How do you read the moves of the markets this morning or this afternoon so far?
Look, I think the market is more reacting to the capital gain part of it. And
Okay.
honestly, there is not too much clarity as to what is the effective date of applicability. My understanding is it's effective today, which is 23rd of July, the taxation bit, which is the short term and the long term capital gains part. And honestly, I think perhaps maybe to that reaction, people in or investors in the market were just trying to book some profit out, right? Possibly trying and booking the short-term gains out and thinking that they can just apply the earlier slabs and just have it booked and then again buy the dip. So that just explains me what has happened in the morning. One big cut where some amount of selling happened and then perhaps buying again in the market. But otherwise, it's very difficult to explain as to what the market is reacting to right now.
Okay.
Yeah,
Suresh.
and Mohit, I want to come to you on the, we were talking about how FNO, like there could be some curbs imposed by the FM on FNO is concerned. Now, they have hiked the SGCG, the short-term capital gain tax from 15 to 20%, and STT, security transaction tax, has also been hiked on both futures and options. How big a deterrent is that going to be, Mohit, in your opinion?
Look, honestly, Suresh, if the country has got hooked onto trading as a means of income, it is very difficult to push the people out by just increasing tax rates. Honestly, that's my firm belief. Though you might just people pay taxes on gains, right? And if they were earning some money, they might just not want to increasing the STT or maybe the transactions. Perhaps it's not the gain amount out here which is getting taxed, but the transaction amount. Maybe the thresholds increase a little. My sense is the financial regulator, which is SEBI, will work in tandem with the government. Government out here in the budget has outlaid some amount of taxes which they have increased, which is the STT and perhaps the long term and the short term capital gains tax. But my sense is SEBI might just come a little hard on this and increase the lot sizes. The combined effect of these two entities coming together and trying to curb the speculative activity in the market or the FNO activity in the market might become slightly substantial. As of now, honestly, increasing the STT alone, will it reduce the volumes? I honestly doubt that. Long-term capital gain tax increasing to me is a little sad. Otherwise, I'm not very disappointed with the overall tax changes. But the long-term capital gain, I think in some way you're trying to discourage long-term investors or long-term savers in the country. Short-term, I think it's a good measure, perhaps trying to equate all the financial assets at one go, which I think was the need of the hour because there were different types of taxes applicable on different types of financial assets. Plus, the holding period was also different if you were listed, unlisted. So I think some amount of parity was warranted out there. So that's a good measure. But long-term capital gains getting increased, I think is never good for savers of financial assets.
Right. Mohit, stay with us. Let me take this across to Feroze Azeez. Feroze, talk to us, post this budget, how do you view the sectors to invest in? Where should, people realign their portfolios going forward? If you can unmute yourself, Feroze.
Before going to the sectors, let me touch upon the broader market. I think the broader market rally could remain intact because there's no bad news there. That's very, very important because it's not just about the sectorial differential performance, the relative performance of the broader market, which is the small cap and the mid cap space with Nifty, has been reasonably divergent, almost about a 35% difference between these indices you see in about a year and a quarter. So that was one risk we were sitting on. If there was something which could actually burst that bubble. Bubble is a strong word, bubble in the sense higher valuations or more than 2 sigma, more than mean P's, which you see in the mid cap and small cap space today, that remains intact. There's no panic there. Point two, I think the capital expenditure has been kept intact. So before and after the budget, I think whatever was the opinion after the interim budget remains the same now. I would say the banking sector will get some push because most of the debt instruments have been brought to parity with deposits. So that could actually improve deposits growth. That's point one. So the banking sector, which is the reasonable valuation, almost 27% of Nifty, I'm still bullish on. It's too conventional to be bullish on. But yeah, that's be it as it may. But that's one sector which is heavyweight on Nifty. And there is going to be a lot of influx from EPFO in Nifty. And Nifty's biggest beneficiary is financial services, and valuations remain intact. Deposit growth gets some push. So that's why financial services, of course, the usual suspects like defense, railways, roads, definitely get the push, but I don't think those are deep enough sectors for some fund manager to put more than 5-7% of the overall money he's managing.
Mithali, that's always something that most Indian middle class does, realign their portfolios post the budget.
No, I think most Indian middle class, like my father, would be watching this budget, straight up since morning, and then will be telling his, banking correspondent or somebody saying, "Ab ye buy karo, ab ye sell karo," and do it this way. So I do think that there will be some amount of realignment in the portfolios. But today, I think when we look at the state of the announcements that have been made, in terms of sectors, there are certain sectors that have been highlighted and which we've been discussing actually since morning, which have come out in the budget as those green shoots and those promising sectors. Green energy, as we predicted in the morning, definitely getting highlighted by the finance minister, where she's even talking about a net zero transition path for even hard to transition sectors. So I think this is a very promising, and I always advocate that your portfolio must link with real economics. Your portfolio must look at, okay, which are the sectors that are actually going to get that push and that support from the government, and green energy clearly coming out, electric mobility clearly coming out, green hydrogen is coming out. I was actually looking at, the allocations that have been made in the Ministry of, Housing and Home Affairs and Affordable Housing, again, getting that boost with 3 crore more affordable houses being announced. Industrial parks, again, 12 new industrial parks coming in, which links with the entire focus on the logistics sector that's been in place under PM Gati Shakti for the last 4-5 years, again continuing to get that boost. So these are certain safe infra stocks, infra investments that one can continue to look at importantly for one's portfolio.
All right, Lloyd, what were your first impressions the second the budget speech ended?
I think it ticked a lot of big concern boxes. I think the first part was really the whole talk about employment generation. The fact that the finance minister addressed upfront issues vis-a-vis employment generation. So skilling, and specifically when she talked about providing EPFO support for all those first-time job hires and people taking on new employees, so the subsidy. I think that was very good signaling. I think the other two reassuring aspects was that the capex expenditure would be maintained. I think one thing that this government has done consistently well is keep up the focus on capex and infra. So I think that part, 1,11,000 crores, and that's great. I think thirdly, I think she spoke about an always important issue in India in the context of agriculture, 1.52 lakh crore in agriculture, and again talking a little bit about natural farming and such like. So I think it did tick some of the main boxes, which was good. I think a couple of concern areas remain, I would say. I think one was, what does it do for export competitiveness? I think for a while right now, I think that's been a little bit of a concern. Our exports have seen a bit of a lull, and I think that is still, to my mind, unaddressed. I haven't seen the fine print. The other point that I think needs to be stressed on, as much as she called this out in her 9 key things, which is reforms, and did mention a few things about land reforms in terms of technology enablements, I didn't see some very clear directions on the reforms front, right? She did go back and say that insolvency and banking, IBC has kind of liberated a lot of money into the economy, but I'm still not seeing a definitive route to reforms. I know privatization has been put on the back burner, it's politically not expedient, but I would still love to have heard out a little big call out on reforms. And I understand this is a difficult budget. This is the first time this government is in a real coalition. And I do understand that they did the right kind of signaling. They talked of a lot of infrastructure projects specific to some of the two states that mattered in a sense.
The allies.
The ally states, certainly, and done pretty well without just handing out a package. I think talking about development. But I would still think reforms is something I would have loved to have heard out much more clearly and much more specifically.
Feroze, was there anything that you were hoping for that you did not get from this budget?
Yeah, I think I was expecting a better net borrowing. I think 14 lakhs and 11 lakhs. I was expecting some degree of surprise there in terms of the net borrowing, but that has remained identical, which is also a good news. But yeah, that's the only thing which I was looking forward to, a little better number in terms of the net borrowing, so that the yields could actually soften and gives headroom for RBI to reduce the interest rates on the repo side from 6.5 downwards, because we are almost at a flat yield curve currently. So that's the only thing which disappointed me. I think the second part, which I think is very critical, is of course the push on the equity. Of course, equity has had some detrimental taxation. 12.5% is not too much of a difference. If anybody would have looked at any change in the capital gain, they would have at least said 15%. So that way, the market is not too disappointed. But I think Indian households have funded the fiscal deficit of our country for long periods of time. The foreigner has always participated in India growth story using equity, and the domestic household savings have only 6% of money in equity. There has to be some better incentive than just that 1 lakh moving to 1 lakh to for 25,000 exemption. Because for the years, now that the foreigners are actually putting money in Indian bonds, you have a breather to move money of Indian households to equity. What strategically has been done for the flight of capital? Otherwise, India's return, if I computed, interpolated for the last 10 years, Indian households' return on their 800 lakh crores is only 6.8%, give or take, for the last 10 years. So as a country, we have to see how does the household start making double-digit returns or at least some real returns, and for which they should have some structurally done something to have to encourage flight of capital from debt to equity.
Feroze, if I can just step in with one macroeconomic question before Krishna comes back perhaps to sit this subject. I want to understand from you, Feroze, the fiscal deficit target which the government has now arrived at, which is 4.9% of the GDP as opposed to 5.1% which was stated during the interim budget. My fear is that with coalition politics now creeping in, 26,000 crore rupees allocated for the state of Bihar, 15,000 crore rupees allocated for the redevelopment of Amravati. That is a solid cash out of about 40,000 crore rupees without too much tinkering, except for the long-term capital gains tax, without too much tinkering on the tax front. So is the fiscal deficit target of 5.9% being a little too optimistic for the government?
And if I could just add to that, the fact that she also directionally talked about next year going to 4.5%.
That's right.
So, directionally as well. Sorry.
So, Feroze, too ambitious, 4.9% and 4.5%?
Yes, it is definitely at the face of it very ambitious, like you rightly mentioned, Karthik Bhai. But I personally think the government has always underestimated revenues. Over the last few years, you see the budget estimates are generally beaten reasonably from a revenue standpoint, one. Two, I think the disinvestment targets have not been met over the years. Okay, if you look at the disinvestment targets were 65,000 crores every year, but the actuals turned out to be 35,000 crores. So I think the disinvestment, especially given the kind of rally we have seen in PSUs, I think disinvestment, I think government would definitely seriously want to bring in disinvestment because there is hardly any free float in our equity markets. The 500th company in the chronological order of free float is 4,000 crores in a country where there is 8 lakh crores of household financial savings. So point I'm trying to make is disinvestment targets can be better achieved, and I think these 40,000 crores can be very easily met at these elevated valuations of PSUs, supplying these elevated valuations relatively, but still relative to private sector, PSUs are still undervalued. Even on the banking and the non-banking space. So point I'm trying to make is 40,000 crores, I'm sure is a buffer in the revenue estimate itself, and the disinvestments could actually help to get this 4.5. I think that's why the ambitious target has been put in place, but the numbers have not been aggressive.
One quick thing I want to ask you, if I were to ask you to rate this budget on a scale of 10?
I would say 8.
That's a high rating. Lloyd, quickly, if I were to ask you to rate this budget on a scale of 10?
6.5.
Okay, there is a difference here already. Suyash, do you want to check with our market man Mohit over here?
Yes, Mohit, I wanted to touch upon rupee. Rupee has hit a record low against the US dollar. Why do you think that is the case? Is it because, long-term capital gain tax has been hiked?
Look, maybe I think the market is kind of thinking that people will pull out money because the long-term capital gain taxes have increased. But my overall sense is the fiscal deficit number which the government has put out is extremely promising number. They had a huge largesse from the RBI, which has helped them to come out at that number of 4.9. In the interim project, the projection was at 5.1. The number coming at 4.9, I think, is a massive statement by the government. This government has had the habit of putting out a fiscal deficit number and meeting it. Last year also, if you see, 5.8 was the number. They came in at 5.63, which again was a big boost. And given this, with the fiscal discipline which they're showing, 4.5, if they stick to it, my sense is on the longer term, Suyash, the currency should stabilize again, right? You can have an interim knee-jerk reaction because of your STT taxes going up, because of your short-term going up, LTCG going up, and foreigners might just want to book out some profits and encash their positions or come out of that. But my sense is because your fiscal is getting better and better, your macros are getting more stable, you will see long-term money perhaps coming into the economy. You also have corporate tax rates going down, the MNC tax rates going down, right? These all should encourage foreign money to come in over a long period of time and perhaps stabilize rupee to a larger extent over a long period of time. Short-term impact, yes, definitely it's because of the taxes.
All right, Mohit Gang and Feroze Azeez, thank you so much for taking time out to be with us here.